Let's talk about buying the home that you can afford and not just the home that you dream about. In today's market, it's easy to get caught up in chasing the dream home. This is not my dream home. I don't want to buy it unless it's my dream home. But here's the truth: the smartest move isn't always the biggest house, it's the most sustainable one. Even when I pre-qualify people and they see the payment, and they see how much they get approved for, they want to afford. Oh, I thought I could afford more. I wish I could afford more. Or and then when I show them like, okay, you can afford more than like, oh, I don't want to pay that much. Well, and that's the smart thing to do, is because you want to pay what you're most comfortable with. um, Buying within your means is a long term win. You avoid financial stress. A comfortable payment gives you breathing room if the income shifts or life throws you a curveball. So if you buy at the max of what you can afford, and then you're maxed out of what you can afford, you have no breathing room. You have no breathing room in case you got to go buy a new car, or in case there's a medical emergency, or in case you want to or in case you want to just do anything else. I have clients who's like, oh, I don't want to spend that much because I like to travel. I want a place, but I want to travel. You don't have any room for that. Anything that happens to you, anything that breaks down, is going to cause you financial stress. Lower overall monthly cost. Smaller homes often mean lower property taxes, insurance bills, utility bills, and maintenance. So if it's just you, why do you need a 4 bedroom home? You may think about that. If it's just you, or you know that or it's your first home, maybe you need to get used to just being a homeowner, so that so that you can just get used to being in a smaller home, or just a smaller home or less expensive home before you try to go buy your dream home. You start building equity now. So if you say, "Oh, I'd rather rent than go buy a house that I want to," so guess what? With your rent, the interest rate on rent is 100%. You're not gaining any equity. If you go buy a home that you can afford now, maybe it's not your dream home. Every payment of home ownership builds equity. Right now, you're just building someone else's wealth. You're giving them equity into a property. You're helping them build wealth. We're not building any wealth for yourself. I have a lot of clients that go in and they bought a home that, like, oh, I wanted something else or whatever. They bought a home 3 years ago. Now they're selling that home and they have equity. They have $40,000 to $50,000 worth of equity in their property that they would have never saved up in their 401k, 40 or $50,000, and they would have never saved up monthly from their job $40 or $50,000, because they just bought a home. They had to pay for somewhere to live anyway. And so they're paying, instead of just paying rent, they paid their mortgage and they've gained equity. And guess what? They're selling that property, using that equity to buy a new property, or even you don't even have to put all that money down, paying down debt, so they can buy a larger home that they may want or desire now. Again, you protect your emergency fund. Home ownership shouldn't wipe out your whole savings. You still need reserves for repairs, life events, and opportunities that come along. So that's why a lot of times when you get pre-approved, that we say, hey, you're pre-approved, even if you don't need a down payment, but you do need to have 1 to 3, sometimes 6 months reserves. The bank wants to know that first mortgage payment is usually the one that most people miss or have an issue with, because it's like, oh, okay, I put all my money down, and now I have a payment coming up in 30 to 45 days. So reserves are there because something could happen. You get laid off from your job, or you could have a medical issue and you're working on less income than you did, or your spouse loses his or her job. So those are things that you want to also think about when you go into it. We don't also, as loan officers, know all of your expenses. We know your expenses that we see on your credit report, and some things that we may see on your bank statement. But you may be taking care of someone in your household. You may have a elderly parent or a child that you're helping support in those things. So you need to, as a consumer, take advantage. You need to consider all those things when you consider about how much can you afford. And again, just avoid being house poor. Your mortgage should support your life and not control it. So having a mortgage that you can afford is what makes your house feel like a home. If you're house poor, then you can't really enjoy your house. You can't upgrade it. You can't buy new furniture for it. You really can't enjoy it because you're stressing over the payment every month. So don't look at it as a starter home as a setback. It's a strategy. Real wealth is built step by step. Buy smart, build equity, grow financially, and upgrade later. You don't need your forever home today. You need your foundation home. If you want to know what's truly comfortable for you and your budget, reach out to me, 404-461-3172, or go to reggieloans.com. Let's talk.